2 of Charting Like a Pro, Charting Like Me, AK-47 over at Prime Trading Investments and TradeCaster.com, where I've been doing this for almost a decade now and going over charts day in, day out, from small cap to large caps, not only for myself in trading, but when I'm streaming live and how many people come over and ask me to break down charts in one-on-ones and breaking down other charts. I mean, I can't imagine. I wish there was a tracker of how many charts I've broken down over the years, but it's a lot. And so let's go ahead and see what I'm looking for when I'm giving out those morning alerts every day. Kind of overall put your mindset in my mind, right? What am I looking at, so that way you can kind of get a little grasp of it as well. I can't give away all the secrets, but I'll give away most of them. It's pretty easy stuff. So first off, you're always probably seeing it if you're watching those weekly previews, which I just put that out yesterday. I'm starting out with that 15-day, 15-minute time frame. I love it. Why? Because you're in the middle of some goober still wanting to chart out a 1-minute time. I mean, I can't even imagine trying to go back and past chart history here and, multiple days. I mean, I understand the day of, but trying to find big key levels 5 days back, 3 days back, 10 days back, you get my point. You're going to have people in the 3-minute time frame. You're going to have people in the 5-minute time frame, right? So I have intervals of 1, 3, 5 that go into 15. Then also, what are also there? It's a derivative of 30-minute time frame, an hourly time frame, a 4-hour time frame where all the big dogs are using. So I got the small dogs, I got the big dogs, and I'm right in the middle. So I see what everyone's seeing. And that's what you always got to think about. What are other traders using? What are other traders, essentially looking at, right? So I love the 15-day, 15-minute time frame. So that's the first thing you want to look at. And so I'm going to give part 1 of this, and there's part 2 of this. So I wanted to kind of wait a little bit, essentially after NVIDIA earnings came out, to see big movement and say, hey, if we've never in this area before, where do we go and what do we do? And so the first thing we're going to be looking at, kind of like this week and like even the weekly preview, okay, now we're in a channel. I see where we're at. What do we do? What am I looking for? And so what I'm looking at overall, the fact that we came down so far on on Thursday, moving into on yesterday on Tuesday, what am I looking at for the week? I don't think we'll get any lower than those highs right there, at least for the week. And so what I'm doing for the week, I'm going, there's no way we get lower than that triple top, right? And so I know I can probably overall just zoom in for Monday, the day of, like say right now if it's pre-market and I'm looking where to go and it's really tight in pre-market, I love those days more so than days that you move around. When you move a lot in pre-market, a lot of the time when you go up like this, when you go up, you'll come down. And a lot of the time when you shoot down, you'll shoot back up. And so watch for that in pre-market a lot of the time. When you shoot up, a lot of the time you'll go back down. And so watch for that a lot of the time in pre-market. All right? And so secondly, when I'm looking at this is pre-market, it's really tight like it is now. I'm like, man, guys, if we get over Friday's high of day, this 530, 530, 20 area, we're probably going to have a nice good move up. And so then I'm trying to zoom in here and find the next key reversal areas over that. And so the next one up, in my opinion, is right around right here, 530, 50. Makes sense. And what do you got to remember too in QQQ and the SPY and Apple and AMD and Google? Let's see here. What are some other ones? Tesla some days, but those are your main ones, especially QQQ, SPY, Apple, Google, AMD. Some days AMD moves a little bigger. Group, stop. So what you see a lot, they move in 25s. They'll respect the 25 and 50 cent increments the most. Yes, every once in a while you'll get these $1 plus moves, but generally it's 25 and 50 cents is where you're going to see these land on. So essentially, right, whole round numbers. So as you can see here, 534. The high of day right there, 531.50 area, right? Same thing right there, 531.50 area. The low of day right there came to around 24.75, So you're going to see what was the low of day right there. That was probably right around it was 30, but still close to the 25 mark, what was the exact low? The low says there was 27.32, right? So they're going to run really close to that 25 cent increment, 25, 50, 75, $1. They'll respect those areas a lot. And so the other thing I'm looking for too, real quickly before I start giving levels up, besides the fact of, hey, don't forget that it's 25 cent, 50 cent, 75 cents. We're going to expect those areas a whole round number with these large cap plays, especially Apple, AMD, SPY, SMCI, or not, I should say SPY, QQQ, is how much have you moved for me? When you go back through the last 15 days, do you see a lot of days over $2, $3? And that's the thing. You can go through and go, okay, low here, 29, high, right around 31.50. Okay, $2.50. Low, 29-ish or so. High, 31, okay, $2.50. Low, 21.30. High, not even, okay, so $2, right? So a lot of $2.50 days, and then you'll get some, okay, 27.75 up to, okay, maybe about a $3, maybe you'll get so most days are $2-ish, $3 days. You'll have every once in a while bigger days where you might go, $5. Maybe you'll have that one day one day where you go more than that. But generally speaking, you're going to have 85% of the days on the SPY, as you can see here. And I can go back even further. And we'll go to the 1 year, 1 day to make it more apparent. Look at the range. So the range right here, it's the R word, R, or the R letter, R, 330. There's your $8 day. 370, 240, 240, 220, 3. There's your $5 day. 330, 290, 3, 350, 260, 2, 330, 4. Couple bigger ranging days. You're probably back with earnings, right? So obviously, but let's just go back to when there's not a lot of earnings. Look, when there's not a lot of earnings right through here. Some are, but to get my point, most days, range, 350, 350, 5, there's your 585, back to 330, 40, 350, 290, there's 4, right? But then there's a big 6, 240, 220, 380, a 290, 260, right? So a lot of, you got to imagine most days, yeah, you're 1 in maybe 5 days, maybe every once in a while, but most days you can see there. So you know right out of the gate, okay, if I'm moving most days $2 to $3, maybe a little bit more than 3, that needs to be your norm. Like when I give my alerts, that's going to be my normal high or normal low of day. I'm going to move about $2 to $3, maybe a little bit more than 3 at times. For my ultimate high, that's why you'll see me give maybe more than $4, maybe $5, maybe $6 some days, because here and there we could do that. But only when that chart setup says that. So whether you're going through AMD, right, and you go through an Apple or whatever they might be, go through and go, okay, how much do you move each day? Is it a $1.52 mover? Is it a 10, 15, 20, 30, for whatever $50 mover? Is it a $2, $3, $4 move, whatever mover? Notice how much you move each day. That's where I'm giving those levels. So if I'm noticing, like here with Meta, you're moving, like I already know, you move most days $5 to $7. It's $5 to $7 on a normal day. Your bigger days are close to 10. Well, then I know when I give my normal high or normal low of day, or like you guys, you need to go through. Essentially what I'm saying is, if you're going through the SPY and you know it's a $2 to $3 mover, you need to go up $2 to $3 and mark out levels. You need to go down $2 to $3 and mark out levels. If you want to go a little bit more than that, just for the safe side, you can. It's going to be a minute to those plays move more than that majority of the time. Maybe you'll have that one day where Meta, it's a normal, like which I think we had on Friday. Meta typically is a $5 to $7 mover, but out of the opening gate, we go straight up more than that. And so your normal high of day is maybe, say, we'll just call it 474. Well, when this starts flying on up, maybe you go, okay, man, we may be at 474 before the end of the day now. That could be a done deal. That's when then you'll have the time to go through, and then you can go mark out other levels. But if you want to do it, go on through. But what I'm trying to say is, if you're a $5 to $7 mover, what you're going to do in pre-market right here on, moving forward, is you're going to go up $5 to $7. And like I'd say on Monday, or I should say on Monday, I keep saying that. On Tuesday, yesterday, go back to my morning alerts. That's why 82.50 was my normal high of day. We would not get higher than that. You do the math, okay, it's about a $5 to $7 mover. That's about right. That's $5 on the dot, right? That's why I put it there. I didn't think we'd get any higher than that. That's why I'm kind of, then of course, low of day, right? You get my point. I'm going, okay, let me go down about $5 to $7 on what makes sense. Okay, then above that, then I'll go back in charting. And now here's the key. Let's quickly lead into part B real quickly before I start breaking down levels. Part B, when you get above 82.50 and you're past the last 2 weeks trend, because again, 15-day, 15-minute time frame, that 15-day trend, the last 15 days, 2 weeks, that's enough of a study to find out which this average, is it a $3 mover? Like I said, is it a $2 mover? Is it a $5 mover? Is it a $7 mover? And by the way, the metas, real quickly before I get to part 2, metas, SMCI, NVDA, NFLXs of the world, those run in $1.50 to $2.50 increment. So let's just say over 82.50, this probably runs most likely to 83.50, then to 85, then to 86.50, 87.50, 88.75, then to 90. When they really get moving, it really becomes $2. So you'll see 490, 492.50, 495. And just case in point, let's go back to QQQ. Look what its high was right there. How I said these respect 25, 50 cent increments, 61.50. 534, right? This isn't just magic out of no. It's a little over. So Joe, but essentially 173, right? That's what you're looking for in these moves. Oh, so close to 193. We'll essentially call that 192.75 though. But again, that's what these plays are going to move. 25, 50 cents. These bigger movers are going to move 150 usually minimum, at least $1, if not 150 to 250 at a time. And so again, 490, 492.50, 495, 497.50, 498.75, 500. And then 502.50, 503.50 maybe possibly, then 505, 507.50, 508.75, 510, right? And so over this 482.50 mark, what I love to do, getting into part 2 of this lesson, is you're going into the 4-hour time frame. What do you do if you go up? Okay, man, we're at, or we get finally above 531.50 and we're at all-time highs. What do we do? Well, over 531.50, you're going to go, okay, cool. Probably going to go to 532.50. 535, and if we really explode, probably just going straight to 532.50, 535, 537.50, 538.75, then to 540, 542.50, maybe even 531. But it's either 150 or the 250. It's going to be the 150 or the 250. It might hit a whole round number and stop out of nowhere. 457 it hits or something like that. But when these move, it's more than 25 or 50 cents. They're moving a minimum of $1, if not $1.50, if not $2.50 when they move and through their areas. And so over 482.50, what I'd be looking for here, over 482.50, you're trying to find the last area, and you can see, wow, right through that area is going to be strong. Look how many lower shadows and so much support we have through there. So over that mark, the next true area up where I see a lower shadow matches with some more lower shadows is what? 84.50 area up to about 85 where you see some more there. So that's your next area up. Over that, you're probably moving to 88.75. I can see some resistance, right? And then you can come back through there and then that bounce right there. So essentially 87.50 to 88.75, yo ass better be taking some profit. Over that to 90. Over 90. 91.50, 92.50 area, right? There's nothing that's super pronounced ever all the time. You might find an area like this right here at 503, and that's a round number, and it's not one of the 50 cent marks. It's just a round number. But I can see a lot of but it's not perfect. There's some areas that go through 503s, and so that's why you'll be damned if you're lucky to find something like this at this 531.50 mark, where it's like over and over and over, you're hitting like almost right on the dot. And those are the ones you're looking at and loving the most when you find an area that you continue to touch over and over and over. Let's just go back to the SPY, and I love this right here to go back through. Now let's just go through charting. Now you know what kind of levels I'm looking for, what time frames I'm looking for, how to understand how much you move for me lately type stuff for your $3 mover, $5 mover, what increments they move in. Find areas like this in the SPY. See, you can barely see it now, but look at this. See this lower shadow where we went to a bounce, lower shadow went to all-time highs. Bounced, same almost exact price, lower shadow. Look what we do here. Group, stop. Back up to all-time highs. Let's keep fast forward. And I got to zoom out just a little bit here. Bounce again. Same almost exact area, that 27.50, 70, 80 mark, just below 420 or 528 is my point. And then went to new all-time highs. Then look when we crack it the following day, so the movement we get from it is the other key thing. Yes, find a lot of key touches in the same area, so 3 here, but look what we did from it, all-time high, all-time high, all-time high. Crack that area and dump a rooski, baby. You kidding? That's what you're looking for. Not only the touches over and over and over, but what do you do when you move back through those touches? So you know what at this point it's support, but what do you do when you crack back through it? And if it's that good of a crack, then look at the next day. Let's just fast forward. Watch this. Failing at it, up into it, failing to it, cannot get over it. Finally, look at the move through it. Look at the move through it on Friday. Look, and then look, you've got to be kidding me. You're going to come back, and now we didn't quite bounce quite on it. We got close, but you knew that's where traders had. So many traders, I guarantee you, had orders from 27, probably 35-ish, up to around 28 that didn't get filled. Now that's what? Major support again. If we come back down and bounce on this again, right? Of course, I'm doing this right now as you can see here, I'm doing this on Memorial Day, by the way. Doing this on Memorial Day, as you can see here. But if we bounce on this on Tuesday, which I don't know that we have yet, course, I released this. This is Wednesday. But if we bounce right there, that's major support. Anywhere through this area, and we bounce there again on Tuesday. We bounce there on Tuesday. Or if we crack through it, then imagine how we crack through that area. So I'm always paying attention to that. Kind of like back to this area, and we'll go through it back here. When we finally went through this all-time high area, we're getting close to all-time highs because go back to the 4 hour. We're not quite there yet, but we're getting really close to it, and I'll show you what I was talking about right here. And so let's go back to this area where we're failing, kind of like I was just showing you a second ago on Meta from a couple of months, whenever that was, we're filling at 530. Look at this beautiful fill. Now we're not quite, but see, this isn't a perfect, that's almost like a head and shoulders. There's a shoulder, that's kind of the head, that could be a shoulder formed a downtrend. This is more of a flat top, beautiful resistance. So let's just go back to it. And my point would be, okay, like say again, part 2 of this, we're right here in charting. So yeah, you would break this down in a 15-day, 15-minute time frame to start off with, using your levels right through here, And then what you would use, if you need to get above it, because you have levels already. You don't need to go back here and try to find levels. You would just stick in this in a 15-day, 15-minute time frame. You don't need to go back and try to use this as well. This is what traders are going to be using. They use the last few days. That's all traders use. That's why I talk about the 15-day, 15-minute time frame. Because that's all traders are using. A lot of people are humans are lazy. Time for whatever their attention span, they keep doing this study and it keeps getting shorter and shorter and shorter and shorter and shorter. We're well below 10 seconds now as human race. It's nuts. That's terrible. A 10-second attention span, no wonder people can't do this for a living. You have to have an attention span of 10 plus minutes easy of just being able to hone in and sit and chill like a stock sniper. The point being, traders are going to be lazy. They don't want to go back and try to find all that and identify it. So that's why I say stay on that 15-day, 15-minute time frame. And so you could have just gone back here. And when you were in this channel, all you need is this. That's all you need. So that morning in pre-market, I'm just using this and that and this level, then coming down to this level. And that's how I'm going to end this lesson back on part 1. Then down to here, right? Finding your key reversal areas. Anyway, where to find above it? Like, dang, okay, well, back here. Dang, okay, well, where do we go if we get above 5? That's then where do you go to the 4 hour? Again, that's where you go to the 4 hour. Then you break down just this right here and go, okay, cool. If I get above 22, 50, 60, 70, I bet I fly to 23.75. I bet I fly to 23.75, and over that I bet I go over 525 to 525.70. And let's just go and see exactly how we did that. Right here, watch this. Right on up to my 23.75. Look at that. Look at that. Look at that. Woo! Baby, I love it. Make my eyes twitch. Right to 23.75. Build another beautiful ascending triangle right there. Squeeze from it. And where do we go the next day? Well, through my 25 mark and we're off to all-time highs, my friends and family. So you see how that worked out? Gorgeous. Where to find that kind of triple top? Beautiful ascending triangle. Where to go next? Just went back to the 4 hour time frame here. Zoomed out. Found where my resistance area was going to be. And I can see here's resistance was right here. And if I look at my crosshairs and just go over from that, and I go, okay, well, the next area up is going to be right here. Right here, 23.75. Watch it. And then right to it on the dot, which is just absolutely gorgeous. I love that. As you can see here, right there before the end of the day. That's how I'm finding it. Let's just go back and just go ahead and chart it. Now, overall, where would I find key levels? What am I looking for? Let's just go, I'm already doing my weekly preview, but let's just go back in time. And we'll just go back here and what I'm looking for. And I'll break down a few different tickers. 15-day, 15-minute time frame. It's in pre-market. And I'm going, okay, over 21.50. Watch for move up to this 21.75 mark. Then over that to 22. And that means you need to be taking profit into these areas if I'm saying that, right? Because we could fail at any one of these. We never know when the top's going to be. Over 22, watch for move up to around 22.35 and over 22.35 to 22.75. And then over that, 23.75. Now back under, I would say 20.90-ish area. Watch for a move down to 20.50, 20.45 area, right? Underneath that to 20.30. Now under 20.30, it looks like we will easily hit 20. And under 20, watch for a move back down to what was Monday and Friday's low of day area of right around 20 or 19.70. Under 19.70, which I do see a little bit of a sandwich there on that Thursday, watch for then a move down to 19, maybe possibly down to the 18.75 rule. Below that, we're definitely going to be hitting 18.40-50 area. You can see a little bit of a sandwich here as well. Under 18.50-40 area, watch for a move down, possibly most likely through 18.20, but I'll give that a little bit of clarity. And then for a move down through 18, in my opinion, we'll probably hit this 17.75 mark. Under 1775 mark, watch for a move down to around 1750. We'll include that all in one area. It's going to get a little bumpy through there. Underneath that, though, we should hit 17. Under 17, watch for a move down to 1650, 60 area. Underneath that, watch for a move down to around 16-ish, right? And so I'm just moving through these areas and continuing to go back. Under that 16 mark, watch for a move down to that little juncture right around 1570, 65 area. Then for a move down to around 1525. Underneath that down to 15, right? So I'm just continuing to do that, right? Over and over and over and over and over. And then so even again, I know you can go watch my weekly preview about this week, but I want to go give ones from, like I say, that you, of course, you can kind of go get a gesture of what I'm looking at. Let's just say it was right here in pre-market, and we'll go down instead of up. So down right now, I'd say back under 86, watch for a move down to 85.80 and then down to 85.50. Under 85.50 down to 85. Under 85, watch for a move down to this 84.75 mark. Under 84.75, watch for a move down to this 84.25 mark. Under 84.25 through 85, or 84 in my opinion, down to 83.75. Under 83.75, watch for a move down to 83.25. Now we're kind of doing that over and over there, huh? Underneath that down to 83. Under 83, watch for a move down to, this starts to get a little bumpy here. Watch for a move down possibly to 82.75 and then maybe 82.50. Below that there to 82.25. Below 82.25 to 82, and then down to this mark right here of 81.80. 75 area, and then of course right here as we can see 81.50. I don't know what we did that day as far as pullback. Of course we never did. We just kept going up. So I'm trying to find one where we went down. Let's just do this area right here. So let's just do this area. So just say I would go under 90.30. I'd love this too, by the way, if and when we cracked it. The reason being we haven't really fully been below that all week except for on Monday. And Monday we just shot straight through that area. And so really underneath that 90, I'd say, underneath that 90, we'll call it 90.25 mark, only thing I'd worry about really be 90, being a whole round number, but I bet we'd find the bottoms from a lot of the support from the Wednesday, Thursday, and Friday below. So I'd bet, or Wednesday, Thursday, Friday. So I'd bet 89.75 to 89.50 gets hit first. Then we're down to 89, we'll call it 89, 15.20 area. Under that down to then 89. Under 89, we could really fall then down to this 88.50 mark, get a good 50-cent pullback, possibly a little bit below even 88.50. Below that, then you're down another 50 cents to 88, even possibly down to 87.85. Let's see how far we go that day. I can't remember. Woo! We go even lower. So this finally gets respected right there at that 87.50 mark. And there's a good short like I talked about underneath 90.30. I know we dumped, but again, underneath that mark, we just continued to free for all. Down through this support area, which would have been the first area I'd have been looking to possibly take profit anywhere close to 89. And really, we didn't start kind of rounding out and down until around the 88.50 mark. And you can see how I say these areas love to respect the fit every 25 cents or, 25, 50, 70, whatever. Because then look where we fell at, right at almost the 75 cent mark. And then again, when you crack that right there, beautiful, beautiful crack. So where's your next area down? You're at least going to fall to where? 88, if not below it, to 87.85, which would be another profit-taking zone. Then below that, if you look, you really will fall down to 87.50 and possibly even 87. Did we go to that mark? And we do. And we finally reverse a little below 87, right around 86.50-ish or so. Right here, off of this area. Which would be the next area below 87, would be right there of 86.50. Below that, possibly 86.25.30 area, and then below that down to around 86. So hopefully that's all making sense and kind of what to be looking for, these reversal areas. Doing the same thing day in, day out. No matter, first I'm coming in and noticing whether it's an Apple, AMD, QQQ, SPY. They're moving $2, $3, $4, $5 a day. So I'm gonna let 2 to 3 on the minimum, 4 or 5 usually on the bigger side. No, Apple usually not. AMD sometimes. Tesla's kind of right there in that same boat. Tesla and AMD are on the higher side. AMD's and SPY as well in QQQ. Apple's definitely in Google, and Google's the other one. Apple and Google can be one that doesn't move more so than maybe $2, $3, maybe one in a day. And so they're little smaller movers, but they respect and love that. As you can go through most of these days, you may have one bigger day, then there's a bigger day, then not big days for a while, and then finally a bigger day here. So, and we're talking maybe $4 or $5 at most on the bigger day. So, most days are going to be $1 to $2. Well, if that's the case, go up $1 to $2 in levels, go up $1 to $2, maybe 3 at most. Same thing on the downside. So now you have your support and resistance on, on the top and the bottom, 15-day, 15-minute time frame. Like right now with Google, if that came in tomorrow, or obviously it's like before I did the morning alerts on Tuesday, I don't need any lower than Thursday. There's no way we're getting lower than Thursday's low. I know that. There's just no way we'll get lower than that move on Tuesday. And so I'd say under 76.25, watch for move to 76. Underneath that, watch for move to about right here of around 76 or 75.20 or 75.75. And underneath that, you should get a move down to 75.25. Under 75.25, actually that'll be my normal low of day. Under 75.25, watch for move down to 75-ish. And under 75 to last Thursday's low of day of 74.60 area for your normal low of day. Your ultimate low of day would crack back below that and have one of your bigger days, and would crack back below the support right under 75 of around 74.75 to 74.60-ish area, and then move down to 74. I don't think we'd get much lower than 74, maybe in the high 73s, maybe down to the 70 mark, right through there. I don't think we'd quite get down, and I'll zoom in to show you what I'm seeing, quite get down to this little area right there of 71.50, but that would be, then that would be the next area up. And so on the way up, I would just kind of really focus on the last few days here and go, okay, cool. If we get over the 76.50 mark, watch for move to 76.80ish or so, last Wednesday's high, a low of day. Over that, watch for move to Friday's high of day, which was 77.25 area. That's also lining up with last Tuesday's low of day, right around that area, 77.25, and also Monday's low of day as well. Over that, watch for move back to the Friday before last, the 17th high of day of 77.50. And over that, watch for move up to almost 78. We'll probably have maybe a little resistance right here. Maybe that Monday's reversal area of 77, 75, 80 area. Then we're to 78. It's over 78 that we get our first decent sized pop up to 78.35. Over 78.35, or we'll again get a decent sized pop. Then watch for, to me, another decent sized pop over 78.35 to around here, around 78. 90, 78, 75, 78, 85, somewhere in that area. Then another good, decent 30, 40, 50 cent pop over that for a move to 179.35. Over that, then watch for a move up to, you got it, right around last Thursday, and then Monday's high of day, right around really close to 170 or 180, I should say. And so that's really what I'm looking for. Finding a lot of touches, finding where we resist and fail a lot. Does that match up with anything in the past? Is it in a 15, 25 cent area? If so, know that, understand that if you're in that play and say you're going long up to 177, take profit from 177 up to 177.25, knowing that area could be a reversal, right? It's not always going to be on the dot, where you see, like, say, a fill right here at 179.90 and then another one almost right on the dot, and then okay, cool, that's the area, 180, take profit. Sometimes it's going to be a 15, 20 cent area, not more of a refined 5, 10 cent area. So take that with a grain of salt too when you're trading plays like NVDA, plays that move 250, 150, $5, maybe even a spike. That is, say you have a target, we'll just say of 1100 like I do. If I see 1190 or 1097, 1098, I'm taking profit. I don't need 1100 on the dot. That is close enough in range for me. So hopefully that settles everything, what to be looking for in large caps. Now I'll go over some small cap plays, and it's the same thing day in, day out. And again, you have a play pop up in pre-market, and it's gapping up out of nowhere. The one thing you are going to do is the 1 year, 1 day. Don't worry about the 4 hour. There's no big boys usually trading these plays. And just go back to past chart history here and see if there's anything after a play spikes up or pops up and gaps up. Is there any charting above it? Like go back to Lucy here, and I know this one will. Lucy here, like say if we on Monday or on Tuesday here when I give this from the morning alerts, I'm going to say, hey, I've got to go look back in time here and go, cool, wow, over this $1 area, we have some chart to fill. And so I'll go back to see if there's anything even further in time and see if there's really a true gap to fill or there's not. And there is if you go back far enough. There isn't, I should say, if you go back far enough, but a lot of traders may not, and they'll see if they just go back a couple of years here into 2023 and then into 2020, essentially they go back just 2 years, they may not see that, or maybe a year, right? But if you go back far enough, you'll realize there's not a true gap to fill. But I would say it's got a real high likelihood to get up to that 135 area. You can see how pronounced that is. Bounce, right on my crosshairs. Look at that, right? And then over 135, my next area up, I would say, is just a nice whole round number of 150, even though we don't see it. I'd call it that. And over it, I'd say a move to 160-ish area. So 150 to 160, I'd probably group together. Over that, watch for move up to 170. Over 170, watch for move up to around the 180-ish mark. We're just moving in 10-cent increments here, so nothing too crazy. And then over that to 190. Over 190 to 2. Over 2 to 210. I mean, I'm literally just seeing areas over and over and over every 10 cents. And another one at 220-ish area, 225. Over 225, my first big pop. I don't think we'll stop there at 235. I think we'd get up to about 250. Over 250, then another decent size went up to, now we're finally running in 25-cent increments like we should, up to 275. Over 275 area, watch for a pop to 3, if not a hair over it, to this 310 area. Over 310 for a pop to 325. Over that, we'll get another good pop to 350. Over 350, I don't know if these little lower shells, but that congestion runs in at 375, 380, and then you definitely see some at 4. Over 4, there's really nothing there. There's a little bit right there at 425, I would see, and then again to 450. And then it's kind of hard to justify. And then from here is great. 5 to 550. You see an upper shadow at 5, then another one at 550. And so that's what you're looking for if you're going back in patch chart history. You're finding those key areas of, again, trying to find a lot of touches. Like right there's a good one at 180. This 170 to 180 area. So you can see bounce, 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 bounce. Resistance right through this area. Bounce right there. Resistance right there. Support right there. Bounce and resistance, then right? So you can just put your crosshairs right around from 180-ish area down to around 170-ish and know that 170 to 180-ish is going to be some strong resistance. I love seeing those. That's a strong area of saying, man, that's definitely could be the high of day. Now, would I short it there? No, but it's one of those things you can go ahead and look for ahead of time. Then again, how to chart that overall. Sometimes we will get like a Lucy type play. 5 minutes fine. Like say if we're running for multiple days here. I think there was one last week that was running for multiple days. I guess AKAN. Not really so much, but what you'd want to really do is essentially you're going to be using, maybe a 5-minute time frame. I don't think we've had one that's really run here recently. FFIE was a no one, but you would just use essentially a 5-day, 5-minute time frame. You can use 15-minute again if you want to here as well, but usually don't need more than 5 days, and you can just kind of find your charts like right here. It'd say under 110. Watch for move down to around 105-ish area. Under that down to $1, and then of course, after that, I like to use again just kind of going back in time. Go to the 15-day, 15-minute time frame. So go back after this $1 area. If you do have to go back further under $1, then look for 90 cents, and under 90 cents I see that's how I break it down. Now I'm going to give what to do in market and what I'm looking for in market. So that's going to be part 3 of this. Part 2 is just charting, how to find levels, how to find past chart history levels, what I'm looking for in market. Kind of how I'm finding levels. Next one's going to be in market. This is part 2 is kind of leading you up, finding what I'm looking for overall. In market, day in, day out. Before I head into market. And so I'm kind of leading you in, from slowly but surely into market conditions. Okay, now it's pre-market. What do we do? And that's when I'll do part 3 is in pre-market and talk about what I'm looking for right now, what you guys should be looking for into the opening bell, at the opening bell. And then I'll, kind of rewind the clock and go back the day before and then break down a day and say, okay, now maybe you just came in an opening bell. Okay, maybe you just came in and it's an hour after the opening bell. And so part 3 will have kind of like 3 parts to it, like, hey, it's pre-market. What do I do? Hey, it's opening bell. I just jumped in. What do I do? And then, hey, I'm kind of showing up a little bit late today. What do I do? And we'll give you your give you that kind of thought process and what I'm doing, breaking down charting as far as in market conditions. This today is just giving you, hopefully, as you really are kind of seeing, for those large cap plays, the first thing you need to be doing, 15-day, 15-minute time frame, finding the channel and identifying the channel. Secondly, how much have you moved for me recently? What kind of mover are you? $2, $3, $5 mover. Then after that, start putting in those levels. If you're a $3 or $4 mover, go up $3, $4. Go down $3, $4. You're like whatever your mover is, go up and down and put levels in that amount for you to trade that day. And don't forget, if you need to go up and away, what intervals to use. Those smaller movers like 25 and 50 cent. 25 and 50 cents up to the whole round number. The bigger movers, love every $1 to $1.50, if not $2.50 in every $5. So pay attention to what you're trading, what intervals it moves, how much of a mover it is. Mark those levels in a 15-day, 15-minute time frame. Use the 4-hour if you have to go back in, further back in time. Find a lot of those support resistance areas that touch up. You know, a lot more touches the better in a certain area, especially if they're really refined. And the more touches, whether it's support, consolidation, I don't care how they show up. And then secondly, on top of that, what do they do when they're touching? You know, once you crack them or you break back through them, like this area that we see here, now we know that that area is super key. So anytime we go through it, whether it's up or down or bouncing on it or reversing at it, it's going to have a pretty good move. All right, there's your part 2 of the charting lesson. Part 3 coming out soon. Talk to you next time.